Talking about some AMFI data as well, the COVID disruption has hit the mutual fund industry as well. Extended lockdowns, job loss, pay cuts, these have collectively and adversely affected the inflows according to data released today by AMFI. And for the first time since November 2018, the SIP book has come below 8,000 crores. In fact, we have the CEO of AMFI joining us as well. Mr. Venkatesh, why has the net inflow declined substantially, even though the liquid category outflow was not as bad as previous quarter end?
I would say that if we compare it year on year, in June 2019, the net outflow was 1,59,000 crore. Against that, we have a net inflow of 7,000 and odd crore for this June 2020. So that is one way of looking at it. The outflow in liquid funds is around 44,226 crore. Plus, you have drop in equity inflows as well. Equity also has shown negative in various funds, multi-cap, large cap. Then you have even in value fund, contra fund, all those places you have negative. So a little bit in the negative has come in the equity funds as well. Then you have some negative hybrid schemes like the balanced hybrid fund and conservative hybrid fund. There you had some negative. So like that, these are some of the funds which have contributed to the negative numbers.
We had seen stable equity inflow during the lockdown months, but this time the inflow was only a few hundred crores. What factors are attributed to the massive decline in the equity flow, if you could shed some light on that, and how much of this do you think is owing to the unlock situation?
I would say that essentially the equity inflows have come down mainly because some profit booking has happened, because the markets were at a little bit of a high during the month-end periods and all. So profit booking has happened. That is one of the reasons for the equity inflow to go. The lockdown also played its part, I would say. But I don't have any concrete reason for me to say that because it has opened up, the physical accounts have started withdrawing money. That we don't have any concrete reason.
All right, Mr. Venkatesh, the SIP book has also come below 8,000 crores for the first time since November 2018. Feedback from the market is that many investors were unable to stop the physical SIP. Are we going to see further decline in this trend in SIPs going forward?
Look at the number of new accounts opened in SIP is around 9,08,000. And the deductions and maybe the discontinuance or the pause, we had introduced a pause during the COVID. So introducing that pause, they can pause their SIP accounts. All put together is around 6,57,000. So net again there is a 2,50,000 accounts which are getting opened. So I don't anticipate these sort of things on a longer trend. There could be one or 2 months dips here and there that can happen, but we will definitely see the inflows coming in through the SIP route, because SIP is one of the best route through which the retail investor can participate in the equity market's growth story.